Hey, how's it going? I am making this video as you can see on the screen, I've done a lot of trading the past couple days, and it's been a really successful 2 days. Probably my most successful 2 days I've had in a long time. As you can see down here, I made almost 600 bucks today. Can't complain about that. It's a good day, especially on an account size like mine. Very nice. So, and yesterday I made about the same. So, I want to overview the trades that I did, so I can show you guys, whoever watches this, if you guys watch, I don't even know. I just make them. And also good for me, because overviewing what you do good and what worked is just, that's a necessity. Because sometimes you have these moments of just clarity, just everything clicks and everything gets it. You'll notice that as you start trading more, is that you get those, and you're like, man, I wish I knew more of that stuff, yada yada yada. But it was good. So I'm going to go through it. So ignore this one. This was just a little scalp I did on Friday. That one's not really anything, but everything over here this week has been great. As you can see, Monday and Tuesday of this week, let me get rid of the execution labels just so I can show you the price action. And get rid of this as well, because I don't really need that right now. I'll keep those on for now. So as you can see, we have had a good 2 days. Lots of movement. You know, we like this. This is nice. Lots of wicks too, but movement galore. So you see that, you can assume that there's some sort of good setups to be had within these. So I'm just going to show you where I was in the beginning of the week. If I pull up my Discord channel, and I will look at here. So yesterday at 12:40 a.m. Alright, well, today's Tuesday, so that's Monday midnight. So as you can see, this is the chart beforehand. This is the same chart afterwards. So you can see I'm looking at two relative even lows. Friday's lows and previous week's lows right below it at 19,760. So I was looking at these right here. So I'm gonna mark this, the sell side liquidity. I'll even change it so you can see it. And then I was looking at these right here. I'm gonna keep this marked because I believe this is a daily fair value gap. But you can kind of guess, or not guess. I'm showing you. These are relative even lows. Just gonna go through what are relative even lows. So look at they're relatively even. That's not. No, that's relative even. So what you could assume is that there's a bunch of sell side liquidity underneath these relative even lows. Retail might look at that as a double bottom. You know, this is your typical, you know, if you're going back to my retail days, I'm still at retail. I'm not going to say that. Back where I didn't have as much of a grasp of price action trading and I just did patterns, I look at this and I'm like, oh, it's a W. It's more like an M. Oh, it's an M. It's a double bottom, right? So people are looking at this double bottom expecting higher prices, which we did eventually receive. But then we had a very obvious liquidity sweep with this at 3 a.m. and then the subsequent dump. In this case, how did I know we were going to see lower prices? One of the good things I like to do to decide where I'm at with lower prices is how we react to OTE. So OTE is obviously this area in here. Price goes to retrace back into here. This is the lowest acceptable price I'm going to see. I don't really want to see price trading past this 7.9. Really, that's almost an 80% pullback from the highs. We don't want to see price go below that. You want to see it like you can see like little wicks, but you know these are more significant wicks to this little area right here, right? You might say that's like a good, I guess you could call them supply zones or whatever, but or you could maybe call them like just balanced areas or whatever. I think they're, I mean, look at, I guess it's not a bad area over there. What could we call this? BPR maybe? I guess this could be a BPR, right? I guess you could call it a balanced price range, in which we're kind of just consolidating around here, and you can kind of expect to cut through this distribution. This is very unbalanced, which is why we have fair value gaps, right? These are buy side imbalanced, sell side inefficiencies. These are big inefficiencies that need to be rebalanced. So usually when you see a big displacement such as this one, you're expecting it to go back into a point of fair value. So this is fair value right here. So I guess you could call it fair value instead of a BPR. Or it could be VPR. I wouldn't say this is an exact BPR. Though it's been a while since I've studied BPR. Prove me wrong, please, if you're watching this. Or if you ever watch these things and I say something and you're like, maybe not. Maybe that's not really it. Please tell me. I would love to hear everything you have to say. We could maybe go up to like a 4 hour and see where this is at. Ooh, maybe this is more like an order block or something like that. I mean, right? Because you do have an order block right here. Like you could maybe mark this as a 4 hour order block. Right? Maybe this is kind of after fact, but I'm kind of on a tangent. But this is what happens. You review price. You see things that you don't see before. This is why you always review price. Right? So you can say there's an order block. So we can expect that since we have this big old fair value gap, we can expect if OTE or the CE of the fair value gap, we'll just use this 4 hour because this is a good example. Because this is high time frame analysis. Notice how we're starting on the high time frame and then going lower. So we're setting this high time frame fair value gap right here and this order block as your target. So we can assume that this is Thursday. So this is before the week. This is Thursday and Friday's price action. So this is me going through the chart on Monday midnight. I was going through this. So this is important to what we're saying because this is what we're doing. We're establishing a bias to start the week. All right. So we've established the price targets down here, right here, and right here. And we're establishing why we have this bias. So in this case, we cut through this displacement and we kind of aren't really respecting OTE. We had 2 wicks down into the order block and then went up into the OTE. I mean, we could expect that, right? But look at where we are with the CE of this fair value gap right here. This is Friday. This is Friday price action. Friday overnight, and then Friday's price action into Sunday, right? So we cut lower, cut below OTE, try to go back up, right? Because you can expect an OTE. OTE is my lightning bolt, right? You expect to go back up like this, right? You go up, you go down, and you go back up. So if you're seeing that this big old 4 hour fair value gap, CE is holding price below it, that means it's respecting the inversion, right? It's as simple as this should have been support, but now it's resistance. And that's what it is. That's all it is. So it's now an inverted fair value gap. So I'm going into the next week expecting that this sell side gets taken and then this sell side gets taken, as I mentioned right here. Though I didn't have the 4 hour fair value gap marked. And frankly, I'll be real with you, I didn't even look at that. This was outside of what I was looking at. So that even proves my point farther is that you don't need every single array on every time frame. You need some sort of bias. In this case, I was looking at the 1 hour, not necessarily the 4 hour. So obviously, price is fractal. It's still the same type of price. It's just, you know, these are 4 hour candles. I'm looking at the 1 hour. The 1 hour told me I was bearish, but now the 4 hour is showing me even more why. So it's a higher time frame showing me that I'm bearish. So I was expecting lower prices. So I marked those, and I said, would love to retrace to new week opening gap. I'm gonna go back down to the 1 hour, just to kind of zoom in here. Right, big old fair value gap, because that was, I think that was in the video one. That was crazy. So we had this big old fair value gap, and then we have this order block, or fair value, whatever you want to call it. And we had this sell side. So I'm going to re-enable my executions, and I'm going to re-enable this. So here's our Friday close at 4 p.m. Here is our Sunday open at 6 p.m. The candle gap between these two is called the new week opening gap. I've talked about the new week opening gap. ICT has many good videos on the new week opening gap. It's definitely a concept worth noting. It's definitely one of my favorite type of setups, model, whatever, on a Monday morning, especially if we see displacement away from it and then a retracement back into new week, right? And so in this case, we opened up, we went up slightly, but then we created those relative even lows at 9 p.m., which is why I like logging in around midnight, because I kind of let the price kind of do its thing for a little bit. So I saw these relative even lows, and what do I expect? Relative even lows means that's a target of great interest. You know, regular sell side, just a regular wick. All right, you know, that's going to be eventually take. You see a double wick or even a triple wick, right? Relative lows, 3 wicks. Oh man, those are asking to be taken, because you have the general market seeing that and respecting that level as some sort of support or resistance, and there's a ton of liquidity underneath that, and they love to gobble up that liquidity. So we see that, and even down here, right here, this low right here. So you can expect there's a ton of freaking liquidity down here. People who have longs, maybe they have longs over here, right? Maybe we just say this. Maybe they got freaking lucky. They caught the respect of this new week over here, right? Look at that candle closing right into it, and then wow, big blast off. But then they have their stop losses below here, and say they didn't, you know, exit the position or whatever. Right? Maybe they're expecting this to hold. So you have a bunch of stop losses that could be executed underneath here, or you're here, right? So this is just the you don't know liquidity, like what they are exactly, but this is a good way of visualizing it for like newer people, right? You're in a trade, you have your stop loss. Usually you put your stop loss underneath a form of high or low. So they have this over here, and boom. So I see that, and I see the retracement back up to the new week. But you can see this is 2 a.m., 3 a.m., 4 a.m. So this was a trade that I executed overnight. I left a lasting, like an overnight order, which is why I only had 2 contracts. I was willing to withstand the risk of the overnight trade because I'm not managing, I'm fast asleep, by cutting risk, right? And putting my stop loss, I think it was above these previous day highs. As you can see, we left even highs here. These are not even relative, these are even highs. Did I get a little lucky? Yes. Not always does this happen. Maybe you usually see a poke above these highs and then below. Or sometimes you just don't even see us hit these highs, right? We could have just went back up into here, maybe stopped around the CE of this 1 hour and then went down. Whatever. There's always a little bit of luck involved in the market. So we saw that, and then we saw our displacement down at 5 a.m. 6 a.m. we'll form a little order block, and then with that order block, we're going to form a fair value gap that is going to be of much interest at some other point. But as you can see, on this candle right over here, I sold it this low. can't really see. 19,904.25. 19,904.25. So like one tick above these old lows. Actually, these are the lows. Excuse me. Actually, no, it's 19,904. So I did do a tick above it. I usually do like a tick or two above or below lows. Just or above lows, below highs, just to make sure I get in, because sometimes you will see like price go right back up, and that's when you form relatively lows. You're like, crap, like I'm gonna get executed, and now you're weak. That's not annoying. Little things like that that you will learn. So I would just pop down on the 5-minute and go over that same trade. So as you can see, I was executed at 2:20 a.m. candle, between 2:20 and 2:25. I don't know exactly. I could go down to 1 minute. Go up, create even highs, which these are bound to be taken, which I'll explain later. It's actually a long video. I don't know if anyone's gonna watch this, but it's kind of good for me to go over this anyway. So even highs, displacement away, retracement back into, in this case would be a fair value gap. $7 a.m., right? Retrace back into that 1 hour fair value gap, which I have marked. And then more movement lower. What this shows us is that we respected this 1 hour fair value gap. Very good thing if you're expecting lower prices, especially if you're looking for sell side. 7 o'clock, go down, go back into this new week opening gap. The thing about new week opening gaps is they can be relevant a couple weeks later as well. This one is, can't even see that. 613 to 616 open, right? So last week, but still relevant. Go back down, go back up into this, then we get our displacement down. But just typical overnight movements here, and then you get your 8:30 candle. You might get a news, maybe so, but we were on the right side of news. 8:35, create a fair value gap here. Look at that. We go up to the CE of this fair value gap. That would have been a banger fucking entry. Right here, right? A CE of that. In this case, we create a order block on a higher time frame. I believe that's a 1 hour, which I used somewhere else, which I could see. And then 9:10. Sweep that liquidity. Boop. Go right back up after sweeping liquidity. Now in this case, we go back up, back down, back up. You know, lots of big movements. I remember this morning session. I was like, wow. I mean, 69-point move all the way up after sweeping sell side. But then we go back up into that 1 hour fair value gap, and then make another low. So I'm like, ooh, we're really targeting these relatively lows over here. But I was pretty content with being done. But what I did do was scalp just a little bit. So you can see, still looking at 19,760, but those relative even lies are looking nice in the short term. In this case, I was looking at highs, but I wasn't convinced that we were going to see them or both sides. I could think we could sweep those highs first and then go down, though it depends on the video. Which is, I'm going to explain, I guess, soon, why that matters. So, see, and we also had a retracement to OTE, which is why I had this up. Which I believe it was, yes, it was this. It was this leg down. Retracement back up into OTE. That was best play of the day. In my opinion, best play of the day. That's 10:05. You short that 1 hour fair value gap CE. You only take your stop loss set above it. You're only taking 8 points of risk. Maybe you have your stop loss above this new week. That's a good play. That's a damn good play. Obviously, I didn't catch that. I already made my big move of the day. But, because I just was content with enough. I made a lot of money. But I did see an entry over here. as you can see, I don't know if you can see on this screen, it was pretty much the OTE and this order block. I think it might have been on the 3 minute. If you can hear the vacuum, I got a Roomba going. It's doing this thing. Beautiful. Anyways, I mean, you can see that I sold this at 19,914.50, which was the old lows, and I sold them on this wick down because we hit this OTE. This one was more of a scalp play. I wasn't expecting like crazy, which is why I took profits. I was expecting a reaction, but then we got the reaction. I can go down on a 1 minute. I don't have anything lower than a 1 minute, but because I don't have crazy stuff. But you could see, I mean, I made about 120 bucks in a minute or two, right? I sold at 898.50. So I saw this, like, respecting this 1 minute. We went down a little bit more, but then I seen it respecting, and I just took profit. Still, that was a little scalp. That one was just a little sprinkle on top of the play. The main play to highlight was this one. Really, this was a new week opening gap. That one's one of my favorite ICT models. So, you may ask, all right, what about today? So today, we saw those lows being taken, those multi and lows. And then previous day lows, we swept a little bit. Slightly. You could, like, that's not a crazy, it's about 2.5 points. And that's a high time frame. What's a previous day low? You could say that's a, this could be swept more, really. I mean, we only swept 3 points. Most people don't have it that close, but it was a little bit of liquidity sweep. But these will be of note at some other point. These relative lows, right? We'll be looking at those. But I saw that, and then a good displacement up, and then a creation of this order block at 4:35 in the morning. And one thing that I saw when I woke up, I woke up around, I think it was like 9 o'clock today. All right, whatever. I woke up at 9, running my alarm. I'm like, oh shit, I gotta wake up for work. Let's look at the chart, see what we're looking at. So I see this order block right here, and I draw it out. I see that 740, 745, we respect the top of it in the upper half of the order block. 830, which is 830 is usually, you know, time then price candle, usually a good candle. If I can check the calendar, there was Chicago Fed National Activity Index. So some news. So you can expect some sort of movement, right? Which we did. And guess what? Top of this order block, respected. So I'm seeing this, and then I see the open. One of the ideas that I'm trying to build is with the open. If I see some sort of large movement against my bias that goes to sweep liquidity or rebalance an imbalance. In this case, we had liquidity underneath here, right? We had sell side liquidity underneath here. So I saw the sweep into here, and then a push into this order block. So I entered at 19,799. So I entered one in here, and then 2 contracts in here, and then 2 contracts around the CE. I think this was a little bit of slippage, and a couple ticks of slippage. I think I hit around here. But I caught that in here. I took some risk, obviously, because we went below the order block. I'll just put it based off the CE because that was pretty much it. So I took about 10 points of risk. But this is why you trade micros when you have a smaller account. Because look at that's just noise right there, right? That's a trap. That's a trap right there. So I see that. And then the next candle goes back down. But then it goes to the CE, the consequent encouragement of this wick. Wicks are gaps, so you can put a 0.5 fib on this and see how it respects it. If you see something like this, oh, you're sitting pretty. Especially when the candle looks like this, I knew that we were good for prices. The moment I saw that, respect to the 5-minute concept of encouragement and the fact that the candle looked like that, I put my stop in profit. So I think I put this here. I put long off the 5-minute order block. So my basis ended up being 19801.25. Pardon me, I do the opposite of open when shown as a liquidity sweep. So a variation of model number 2. So, thanks, Abuse. So, as you can see, one of the variations that's helped me in these last 2 days, after having a good conversation with Mamba and his server, I was hitting good plays, right? I would get plays, but then I would not really do what I needed to do with my take profits. That was pretty important. Like, I wasn't putting partials deep, like close enough to my basis. I was being a little bit too greedy, and I had a static 50-point target, and that really, Roomba's freaking over here, bumping into my desk. You made it this far in the video, calling me impressed. It means you actually want to learn how to do this. So, good on you. Nope. Nah, it's okay. I won't get stuck underneath the couch. Anyways, so that was the thing. I needed to figure out partials better. Partials are really important. That's how you secure profits. So especially since I'm now trading like 4 or 5 contracts, I have enough contracts to be able to take a partial at a low-hanging fruit and still have enough contracts to make money. You can make plenty of money with 2 contracts. That trade that I did with New Week opening gap, that was 2 contracts. I made $400 and something with 2 contracts because I caught a 100-point move. That's it. 2 contracts, I made $400. On an account size like me, and hell, it's $400, man. That's a credit card bill. That's your groceries for a month. That's a good amount of money with 2 contracts. You don't need all this crazy stuff. Hopefully you don't hear this robot. It's right underneath me. Oh, he's on my desk. Yeah, it's stuck. All right. Yeah, I know you. Ugh, gotta move. Yep. Okay. Yep, there she goes. All right, cool. Hopefully, it's gonna get stuck again on my desk. Anyways, so as you can see on this first one, 19834.25, which was the bottom of this little order block right here, right? I put that there as my low-hanging fruit. In this case, if my basis was here, I did put my specific basis, but it's pretty close to this. It's about 33 points. I mean, that's still like $65 on one contract. That's good, man. You take those profits, and guess what? You made money. You realize money. Realizing money is important. That's why you got realized and unrealized over here, right? You have realized and unrealized. You got to realize money and actually make money and keep money. Unrealized doesn't mean shit. Realizing it is the first keynote of becoming a profitable trader. So I made the decision to put target here, this low-hanging fruit, and then my second take profit, I think squeak, over this buy side over here. These are relative even highs. As you can see, 19.85125, and the high of this candle was 19.85250. So I was ready to just call it here. I was expecting price to go back down after sweeping buy side and maybe go lower, but nope. We ended up going down, displacing up. This is a nice candle. This is a 43-point candle. I mean, at this point, I had 1 contract left. Again, you can make plenty of money with 1 contract. But since I see this displacement, we go up, we go down, and I average in around 19.860 over here, and see if I can get higher prices. In this case, I ended up just selling 1971. I ended up selling out here. Not the greatest exit or whatnot, but at this point, I wanted to realize my profits. I was working. I made plenty of money. I was fine with it. In this case, this 5-minute fair value gap CE held perfectly, and then we saw higher prices. But I was perfectly fine with money, right? I missed out on this whole move up, right? But it doesn't matter. I still made a lot of money today. This was a little scalp that I opened up, but then kind of sold immediately because I wasn't very sold on the price action. I was gonna short this right over here because this was the 1 hour prop block, which lined up with the OTE of the leg down on, I think, the hour, same hour. So I wasn't sold on the price action, so I kind of just sold it there, and I was like, all right, cool. And I was pretty much done with the day until I decided to start doing some scalping and have some fun over here. In this case, I saw this propulsion block. Took a entry at this CE, took another one around here. So I had 6 contracts. I was looking for higher prices. I'm gonna go down to 1 minute for this because it shows my ideas. Oh yeah, this one I started off on. That's right, this one I started off on. I was looking for higher prices, so I wanted those relative even highs. But then I sold before we dumped. So remember this dump. I think Apple dumped a little bit. I kind of saw this move happening before it happened. I saw us respecting the new week opening gap right here, right? I saw these 2 wicks and I exited. That's another thing. Don't be afraid to exit. If you see your trade is going wrong, I exited, made 20 bucks or so, and saved myself from losing. Boom. So I saw price respecting the opposite side, so I exited. Good, it's a good trade in my book. But then what I did, I waited, because we were respecting this prop block, right? We respected this range. I saw this. I waited for the first fair value gap to form. I guess this is technically a silver bullet since it's between 3 and 4. And then I saw us dip down into this 1 minute fair value gap. So I entered it at 19,948.25. I entered it right here. I had a damn good entry. So what I do, I marked my partials. I wanted my first partial with these old highs over here. And my second one, I wanted these buy side. I knew this one was a kind of a reach. But this one was simple. I sold 3 contracts pretty damn quick, right? 19,968. I got 3 contracts for about 20 points each. I made like $100, wicked easy. 100 something bucks, wicked easy. These ended up not getting. Obviously, we formed this. We were respecting this 1 minute fair value gap over here. I wanted to average. I averaged in again over here to get up to 5. So I was expecting us to see prices. At this case, I had a good basis around here. So I kind of was like, all right, I have the good gains today. This is just a scalp. This isn't my main trade of the day. Let's have a little fun with it. Let's take a little bit more risk. So I did. Averaged in a little bit, but then eventually sold before when I saw us break and close below this 1 minute fair value gap. I didn't feel like dealing with it anymore. My stop loss was in profit. It was getting closer to my basis. I didn't really want to deal with it. But that is how I made my profits today. A little quick dive through of my my trades. Actually, I just realized one thing. I never talked about going through the FANG, which is one of the key ideas of my trades. I'm gonna make another video for that because this one's already way too long and no one's gonna watch it. I'll make another one, try to make it shorter for the people who do watch it and they understand. And this is good for me as well, obviously, but it's good for you guys too. So, all right. Well, if you end up making it through this 34-minute and 38-second video, thank you for watching. Thanks for listening to me ramble. Thanks for showing interest in my trades. I highly doubt anyone is going to hear this, but And if you do, thank you. I appreciate you being on this journey with me. I hope I can help you get to the same point as I am. Obviously, I'm still far away from being there, but this is my balance here. I gotta add the 25th today. Obviously, this would be closer to $1,000, but my first $1,000 week I've ever had. Obviously, June was not great for me. Pretty break even, just break even trades, just trades that like this day. I remember this day. This day was terrible. I risked way too much. I just wasn't on my shit. I was too overconfident about the third, and then just some other silly little trades that ended up not working out. But obviously, I just been on a good one this last couple days, so I want to explain. So thank you again. Have a good one.